In this video, I'm going to teach you exactly how to find valid relative equal highs and relative equal lows in the marketplace, and I'm going to show you what the valid ones are, why you need to be paying attention to them, and the logic behind using them. So if you're familiar with liquidity, then you understand that above all these highs and all these lows in the marketplace, there are buy stops and sell stops. Now, that's a great thing to understand, but every single high and low has got liquidity under it. So you can use relative equal highs and relative equal lows to determine where high probability spots of liquidity are in the market. So the way I like to do this when I'm opening the market in the morning for my trading session is I'll go on the 15-minute chart to identify where looks smooth in the market. So what I mean by smooth is these highs here. We have a swing high here with the 11:30 swing high, and then just to the right of it at 4 o'clock we made another 15-minute swing high. And the most important thing here is that this high is just lower than this high. So that's what makes our relative equal highs and relative equal lows valid. For relative equal highs, you want the high to the right to be just a bit lower than the high to the left. For lows, you want the low to the right to be just a bit higher than the low to the left. So if you just imagine it like this, we want our high to be formed like this. We want it to just be just under this first high. So we have two liquidity pools that are very close together, basically. And then obviously for a swing low, it would look like this. It would have a swing low and then a higher swing low very nearby, and not going past the original low, because then that would be an invalid relative equal low. We don't want to be trading towards that. We don't really want to be using that in our trading. So when I went into Wednesday's trading, obviously I have the logic that we're likely to draw up to here. Relative equal highs are not something that I'm going to always be targeting. It's basically just like a draw that I can use. So I know that for this day, we've got these equal highs very close to where price is, and we don't really have any obvious equal lows that are nearby. So on this Wednesday, we were very likely, in my opinion, to draw up to these equal highs. So I can basically use that narrative for my trade entries to look for longs towards these equal highs and take partials along the way. Now, dropping down into a 5-minute chart, obviously we have these equal highs that we just identified on the 15-minute chart. What you might notice is that we also have a pair of relative equal highs right here. So we had this original high, and then when we opened, or just after open, we ran up here, made a high just underneath this high, and then drawed lower. So basically what we can do there is use that as an added confluence, kind of, that it's another target we can use to aim for our long trade. And now dropping down once again, so these are the highs we just identified on the 5-minute chart, and then we have the higher ones up here on the 15-minute chart that we spotted. Now on the 1-minute chart for the AM session, we can see that these lows down here are also smooth. These are relative equal lows. So obviously price came down there. So right after we opened, we ran up and left this relative equal high here that was formed, that we spotted on the 5-minute chart, ran down, swept the equal lows, and then we can look to get long, basically. So how I'm going to use relative equal highs and lows in the marketplace is I'm looking for one on either side of the market. And if I can spot one, I'll then look for a trade towards it. If I spot relative highs on the market and relative lows in the market, I will wait for one side to get swept, and then I will target the other side. So here we obviously had these equal lows, ran down and swept them, and then I can look for my entry being the 2022 model. So we can enter on this fair value gap here. And I did actually take this trade on my top step funded account. So you can go back and look at the trade recap video from last week's trading, and you'll see the executions for this trade. But the main thing for this video is we want to use the narrative of where is smooth in the marketplace, where are the equal highs and where are the equal lows. And then using those liquidity pools, we can then determine a narrative or a bias, and then use that to enter our trades with higher probability of them being winning trades because of the logic that we have behind them. Now, obviously this doesn't work 100% of the time. Obviously you will still have losing trades even if you are always targeting where is smooth in the marketplace. Here, this was Monday's trade-in from yesterday. We had these relative equal lows in the marketplace. As we can see, look how smooth all them lows are. You see how we have this low and then all these equal lows here. That is way too smooth, and the market is very likely to come and upset that because there's going to be a lot of people's orders under that level because it looks like a really solid level of support. So there's the kind of logic behind why there's so much liquidity there, is because if you think about people, everyone who's getting into trades here are all placing their stop losses underneath this real nice, solid looking level of support. Now, obviously on this day, it was a pretty tough day, but as the price just kind of rallied higher, and then topped out up here. But interestingly enough, even though I did personally take a losing trade on this day because I had my model show and I was trying to trade towards these equal lows and obviously got stopped out. However, what is interesting is if we just scroll to the right a little bit, look where the price did eventually draw to. right to those smooth lows to upset them, go below them, and then turned right there. So even though I did take a losing trade, trying to trade towards these lows on Monday, it is still nice to see the logic working in the sense that early on the Tuesday AM session pre-market, the lows were in fact upset. And I'm sure there are plenty of ICT traders that trade this way that got in this short. In fact, I do have a friend in my Discord who was able to catch this short towards these smooth lows and obviously made money. So the logic does work, and I will definitely advise you, if you're an ICT trader and you're struggling to determine really high probability liquidity pools that price is going to draw to in the market, make sure you're looking for these equal highs and these equal lows. For example, straight away today, I will be looking at these highs here because you see how smooth they are. We have a high here and then a lower high just to the right of it. I will be using this definitely as something I'm going to be looking at today to maybe determine that we might draw higher and then get into a long trade due to that. Maybe not today because we have CPI and Fed Chair Powell speaking. So if we didn't have those things, then I would be using that logic that I've just explained. That is all from me for as regards to relative equal highs and lows. If you're not paying attention to them, I definitely recommend that you do. And yeah, thanks for watching. Hope you enjoyed and learned something.